Hi, and welcome to the Trade Stylist. This is the channel where I try and make you fall in love with the commodities which I have probably been in love with for the last 20 odd years. The idea is to keep it simple, keep it straightforward, and to guide you to a place where someday you'd be able to craft your trade. This is week number 1, and we're going to talk about what the market did over the last year or so, what this week has been since the year closed last year, and how the market is trying to shape up going into the next week. We're going to look at some of the important trade headlines, maybe some important numbers, and then, of course, what's up for next week. So, here we go together, and as always, may the trading gods be with us all. This is week number 1, 712024. The first thing we do is to put out a disclaimer. The disclaimer is that every single view on this program, as well as any future ones, are my personal views and they should not be construed as market advice. Number 2 is that every investment has a risk profile, and in commodity trading, more often than not, there are chances of you losing more than your invested capital. So please take it with care, trade with care. I am David Jyoti, better known as DJ, and you can find me at the Trade Stylist. So before we start on the market update, something that I always pray for is may the trading gods be always with us all. So let's look at how the markets fared in the week 1 of this year. We start with Robusta, which declined roughly 0.3% over last week, while Arabica coffee went down by 2.7% basis last week. Cocoa London as well fell by 1.6%, while Cocoa US fell by 1.2% compared to last week. Orange juice as well dropped by around 1.2%, while sugar and cotton both dropped by 1%. Coming to grains, we have corn dropping by almost 1.6%, wheat by 1.1%, soybean by another 1.1%, soybean oil just a slight improvement by 0.2%, and then soybean meal dropped also by 0.8%. The year-to-date numbers show us something pretty interesting on the commodities under focus, where the grains typically have been bearish throughout the last year, while the rest of the commodities that I focus on have been strongly positive, with just sugar barely inching out a 7% gain year on year. Cocoa London almost 70% year on year increment, Cocoa US close to 58% increment, coffee between 20% to 46% increment, either you're looking at the US or the London markets, and then orange juice another 54.74% increment over last year. Grains, on the other hand, have been quite bearish, with maize being hit almost 31% down year on year, while wheat is down 17%, soybean are down 18%, and soybean oil and soybean meal down by 25% and 28% respectively year on year. Closing out, cotton maintains almost a similar price range, barely down by 2.5% over last year. Now we go to trade speak, which we say what the traders are talking about over the last 9 to 10 trading sessions for each of these commodities. We start with Robusta coffee. Robusta closed last week at $27.99. The first 3 to 4 days looked to be slightly more bullish than in the previous week, but after that the rally just fizzled out, and at the end of the week it has been sort of range bound. Arabica, on the other hand, sort of followed a similar thought process. The only thing is here the idea of bullishness lasted a little longer, almost to the 7th trading day, but after that as well the rally again fizzled out and we are again towards the lower end of the range. While Cocoa London has been very strongly supported. It has definitely taken a hit in the past couple of days, but overall, throughout the week, it's been strong and it seems to be base forming even now. Cocoa US, on the other hand, closed at 42.04, and it seems that after trying pretty hard to maintain a bullish overtone during the first 7 to 8 trading sessions, it has lost a bit of steam in the last 4 to 5 trading days. Orange juice, on the other hand, keeps on breaking new highs, and breakfast gets more and more expensive for everyone. Sugar, as well, for the first few trading days was almost quiet, and then it rallied up, forming from a lower base to 21.13 at the end of the week. Cotton had been pretty range bound at the start of the trading sessions. It maintained a similar base, but at the end it has rallied for last 3 days. While we still see that there is a lot of resistance at this level, but there is seeming to be some kind of bullishness coming into the market. Maize, on the other hand, had tried to rally almost 3 times in the past 10 trading days, and it is definitely trying to push and create a higher high as we go into the markets in the coming week. Wheat has been bearish, it has stayed bearish, and we still feel that the market has been pushed downwards, subdued, and completely overburdened by excess supplies and a general bearishness in the grains market. Coming to soybeans, on the other hand, all of the 3 complexes have tried to rally, but except for soybean oil, both soybeans and soybean meal has actually failed to live up to the rally in the last days. Soybean oil, on the other hand, definitely is moving up. And funnily enough, there have been very few deliveries happening in soybean oil. So keep an eye on that. So this section is what I call trader peak, where basically we look at some important things that probably might change the way we look at things, or things which might impact the way the commodities market may perform in the coming weeks and months. And the first thing that I usually look at is the commodity flows and the fund flows and the ETF flows. So if you look at the 3-year chart which is in front of you, all the way from July till October, the markets actually have been taking out money. And this is primarily US, yes. But we do think that net positiveness is going to come into December, and we are going to see, once the New Year report is released, that probably this fund flow turned a little bit positive by the end of the year. Now we come to the important headlines of the week. The biggest headline, of course, is that the Red Sea, Iran still challenging enemy presence, and this is also leading to the oil prices settling higher due to these Middle East tensions. USA is now trying to set up food can steel dumping duties on countries like Canada, and they're trying to make sure to protect the steel can industry. The storm that is facing Vitol with the bribery case in Ecuador keeps gaining steam, while the EUDR, which is the EU deforestation law, comes into play in December 2024. WFP is planning relief programs for Zambia, which means there would be some commodity sourcing going on from that side. And finally, slight good news is that the World Food Price Index closed roughly 10% lower in 2023 compared to that in 2022. And as we go into this coming week, we have 4 pretty important data points coming out. One is the US inflation data. 2 is the China inflation data and balance of trade. Third would be the US PPI month of month. And fourth would be the UK GDP month on month, especially as the market feels that the UK might be going into a recession, or basically battling recession at every point of time right now. Now we go into what we are going to see coming in the next episode in the next week, and I think it's going to be a big one. We've got WASDA coming out, and I'm going to be talking about a cocoa overview, sort of reflecting on why the prices are where they are, and probably even more importantly, where the prices look to be heading towards. And also finally, the first trade craft, where we're going to be setting up some trade setups and probably making you some money in the process. So hopefully you liked this first episode with a small recap of the markets and an idea of where we think that the market is going to look at in the coming week. Next week we dive a little bit deeper into a few of commodities. Till then, may the trading gods be with us all. The next episode goes out on the 13th of January, next Saturday, and hopefully I would have added a little bit of value to your weekends. Cheers and have a good weekend.